Good afternoon, everybody. This is Dennis Wilburn from All. No, I'm not from All About Trend. David Grandy. David, are you there?
I'm here, and I'm from All About Trends.
Okay, we have our identity secure now. Anna, I'm from the Active Trend Traders. Dave, we've been getting a lot of couple of emails coming in, and some of the folks, some of our members out there are confusing us. They think I'm you and you're me, but just for clarification purposes, folks, if you have a question about All About Trends, email David, and our emails will be up on the last slide. And if it's about active trend traders, email me, Dennis Wilborn. And so let's get going. Just a quick disclaimer. All materials presented here are for training purposes only. Traders should paper trade any new method prior to risk of personal capital. David, I want to say I came out and saw you at the Money Show yesterday, and you were fantastic. And you had, gosh, what did you have, about 75 people in the crowd?
I think so, about that, yeah. Yeah, it was good. It was a lot of fun. I really enjoyed it because, we were just talking about how to make money in stocks. So,
and I love, and we always keep, talking back to that we love to talk about trading stocks and showing people, when to get in, when to get out, based on what the charts are doing. And we love it when, people follow what we're trading and they get in and get out at the same time we have been getting up, and they're making some money. And so with that, I know you look like you're having a great time yesterday talking about All About Trends. And just a reminder to everybody out there that, David and I, we love to talk about trading stocks and trading stocks successfully. So if you do have a group, we would love to plug in and present about how to make money trading stocks. It's just that, it's a very simple title. And but David's track record in the active trend with All About Trends and ours with the active trend trading have really been doing well for several years on how to make money trading stocks. We can present at either your event either in person, or by webinar. We have the capability of tapping into your meetings. Just let us know when and let us know where. David, I know you might want to add into this if you want to.
Yeah, we love going out and meeting people that are interested in making money in the market, and we have systems here that make it very simple and very easy to do that. They're easy to understand. With the trade alerts we send out, there's no mystery. There's full accountability for every trade we do because we own every trade we do. We issue trade alerts. We're buying so many shares. We're selling at this price, or we got stopped out. I mean, everything we do is on full display.
I know I often get some questions from members, David, that ask, well, are you trading the same thing in your account, your real account that you send out alerts on? And I know, for me, my answer is yes. I trade basically the same setups, the same way, and take my profits and my losses the same way I do in the account that I show to my to the members. And you guys do the same thing, right?
Exactly.
Yeah.
Yep.
And so cool. Well, let's get on to seeing what the market's doing. Market was pretty interesting this past week. I kind of come into this week going, well, are we going to do a rest? But last week, just as a refresher, last week the market was at resistance, but in both the NASDAQ and the S&P, we get a nice little breakout. We'll see that on the chart a little bit later, but we were asking a question last week, were we going to stay in the range? All three of the indices that we're tracking were at resistance when we started the week. The S&P, we got a fail out, but we got a breakout. But will it turn out to be a failed breakout? We'll see that, and we get on a daily chart, we get a bearish reversal signal on the S&P, a dark cloud. The NASDAQ really showed some pretty good price action strength, although the volume wasn't, necessarily that great a volume, but it broke out, and then on Friday it put in a nice little doji pattern, which is a pattern of indecision. And then the Russell is consolidating at a level of resistance. So my question is are we still, are we hair trigger to the sell, or it's more or less the same thing that we had last week, or will the recovery continue? And we'll have to stay tuned and see what the markets show us. One of the indicators that I like to use is this indicator here. Let me get rid of the drawings from the past. And we've highlighted this several times in the past, but if you're new and if I've never demonstrated this to you before, there's certain periods on this chart, David, and I don't know if I've actually shown this to you. There's certain periods on this chart, especially when it's down in this lower level, where the percentage of stocks on the NYSE that are above their 20-day moving average slips into this, let's say between 25, below 25. And as you can see, I've highlighted 5 times here, back in September, here, October of last year, February this year, April this year, and then recently here in August. And one of the questions I had been asking when we did this little pullback here was, were we going to get into a chop zone somewhere in here where it just bounced around? As you can see, nope, it has powered higher. And we see that in the S&P and the NASDAQ. But why are these areas so important? I did a really quick little calculation for everybody to tie the dates here associated with that to each one of those lows where I drew the circle equivalates to one of these dates here, lower zone extremes below 25%. A trade on just UPRO, David, just buying UPRO by itself. From August on August 28th, you get it rallies from the low to the high in 22 days, and it gains 20%. In October, 25% in 21 days. February, 28% in 31 days. April 11th, 15% in 31 days, and the current one is still underway. We don't know if we're going to pull back from that, but it put in 15% in 13 days. So this is just over a little bit over, not quite a year period of time, David. And look at the return on this. A $10,000 investment, if somebody would have just invested totally in UPRO 5 times, and then rolled over that into the new, into reinvesting 5 times, that $10,000 would have grown to $25,000, over $25,000 for a return of a little bit over 157% in a year. And so that's why knowing this chart, for me at least, is very important, because this chart, it just seems like it's been very predictive. When it gets overextended to the downside, those lower levels show a good time to bounce, and we've done evaluation of this for the past 5 years. Same thing. The upper zone extremes above 80%, not every one of those highs led to a correction. And for everybody, I've included in this week's presentation, this is a real quick little chart, and this is UPRO, and each of the lower arrows, like you see here, coincides to those dates when that percentage of stock over the 20-day day moving average was at below 25, and each of the arrows up here on the top correspond to when it was over 80, and as you can see, a couple of them actually led eventually to a little bit of a pullback. But one thing I want you to note is not everyone led to a significant correction on the upper level. But on the lower level, everyone led to a really nice upside move, a rally. David, that's kind of impressive, huh?
That's outstanding. That's really great. I was always wondering about that, if that corresponded, and I'm glad you did the work on that to show us that, because that makes it pretty clear.
And so let's see if we can Yeah, and I wanted to basically share that with everybody, just to let everybody know that, why, especially the lows there, why those were so important. And we watched when it gets into the high level, because oftentimes that's where the market starts to, the momentum seems like it starts to temper, and it makes sense, because if you have 20%, if you have 80% or more of the stocks in the NYSE above the 20-day moving average, that means they're showing a lot of strength. But let's take a look at the S&P. Yeah, I provided that for you just for your benefit. Okay, David?
I appreciate it. Thank you so much.
Okay, here we go. We got the S&P. S&P is at a resistance level of about 1991. It made it as just about 1995 and reversed. This is a candlestick pattern I was telling you about. This is a dark cloud cover because it came down over halfway of this long candle. That typically is considered, well, it is considered a bearish reversal signal. But one thing with candlesticks, you have to remember that they may tell you where you are likely to get a reversal signal or reversal. It does not tell you how far it's likely to fall. And so if we do get a slight rollover going into this week, where's it likely to fall? You've got the 8-day moving up, you've got the 50-day moving up, and you've got the 20-day all turning up. So any of those areas there would be potential good bounce areas. And plus you've got a really nice support level about 1960. On the weekly chart, we see the push-up. This is, it's a fairly strong-looking pattern. It looks like it wants to continue rallying after a pullback. Of course, we could go into one of those patterns where this is the high and it rotates all the way back down to the low. But both the S&P and the NDX, and I'll remind everybody, we switched the NDX rather than the NASDAQ composite because the NDX, the Qs emulate the NDX, and so we thought providing a chart of this would be much more advantageous for us than just the regular comp. As we can see, we get a breakout above the 39.97 level this past week. And if you remember, at the end of last week, I was showing this hanging man type pattern here, and that's typically also a bearish reversal signal. However, as soon as we bounced above on Monday and did not come back below, this candlestick pattern is now voided. It no longer has any type of implication in our analysis. However, the little doji candle we put in on Friday, where basically the index pushed higher, pushed lower, and then finished just about even for the day, does have some indication, especially when we start getting a series of these, because that may foretell either doing one of two things. We have indecision at this particular level. That could say, okay, any type of angst out there in the world and the world stage may push things lower, or it could reverse and go higher if we just hang on. We will see what takes place. And then the Russell. The Russell, I mean, I hate to say this, but the poor Russell has been the red-headed stepchild of all the indices for just about since back in late June or first part of July as it's pulled back. And we get a series, David, of these, we're starting to get some long-legged dojis, indecisions, and look where it's at, right at a pretty significant, what appears to be a pretty significant resistance level at about 1165. And for those trading T and A, the positives are we got a nice cross here of the 8 over the 20. We did close above the 50, but that 50 is just going straight lined across here. And as you can see from the momentum, while it has popped up above the zero line, has basically flatlined, just like the prices have. A break above will probably take us back up to the 1200 level. And if we get a close below this trend line coming up here, this purple trend line, then we're probably going to go back down here and visit in this area. but it may happen in very short order. And as you can see, the momentum behind the Russell, David, you can see that in the slope of the trend line, just hasn't been as great as what we've seen with the S&P and NASDAQ. So that's what I've got on the indices themselves. And David, I know you've got to cover some great stocks you guys are looking at. Are you ready?
I'm ready.
Okay, let me switch over. And you're on.
Okay, yeah, and I agree with you, Dennis. The Russell, it's kind of a dicey one. On one hand, you look at it and it's a classic short sell setup. It broke support and it's pulled back off of its lows into an area of resistance, and a break below that line that downtrend line you were showing, or uptrend line, I guess, would trigger a short sell if that was a stock. However, the other indexes, the NASDAQ and the S&P, are breaking in new highs. So, I guess what I'd like to see for those of us that may be in the long camp would be for the Russell to pull back here a little bit in a very orderly manner, and then move higher, because it's been on a nice run, as have the indexes, and it'd be nice for all the indexes to just consolidate gains here a little bit, because we've made quite a big move in a short period of time. And last week is one of the reasons why we opted to do these webinars recording only and resume the live recordings after Labor Day, because it was just a typical week where there wasn't a whole lot of action, there wasn't a whole lot of volume, and it was just a little drift up on the indexes pretty much, and which is very typical for late August, and this week especially, as we approach the Labor Day holiday, is probably going to be more of the same. I expect the indexes to kind of just drift around here, and probably with a little bit of an upward bias, and then we'll see what happens come Labor Day, when the true, I think you coined it best, the true personality of the market will come back after Labor Day. So so I'm not really expecting a whole lot this week, but like I said, I'd love to see some consolidation here, because it would complete some really good setups that are getting close to being completed. Last week we talked about how for the first time in months we had started to see some short sell setups, and we said, well, is it time to go short, with a question mark. We weren't saying, hey, it's time to go out and short the market, but we were saying, hey, at least we're now starting to see some patterns, which tells us that we could be headed down, because if we weren't, we wouldn't be seeing these patterns. But these patterns have just kind of drifted as well as the markets have drifted this week. So we're still kind of in no man's land. But the difference between this week and last week is we're starting to see some more long side setups now too. So we've got some long side setups, we've got short side setups, and it's just a reminder that it's a market of stocks, not a stock market, and we trade what we see, not what we think, hear, or fear, and all that matters to us is what's happening on the charts of stocks. And we've got stuff for folks that like to short, and we've got stuff for folks that like to go long. And like I said, I think we've got one more week of just kind of just drifting, if you want to call it that, before the market returns to its full volume, I guess. So just a reminder about our trading plan: we don't chase stocks, we let them come to us. We buy support, we sell resistance, and we short resistance and cover at support, and we're just trading what we see. And so far in the month of August, we've earned over $4,100 in profits from trades we featured in our newsletter. Our newsletter, like Dennis's, it's unique to most other newsletters because we own every trade we do. We don't just write about a stock, and if the trade hits, we say, hey, look at that great gain, and if it doesn't hit, well, we never mention it again. No, we own every single trade we do. We put out a watch list, and when a stock on our watch list triggers a trade, we send you a trade alert so you can take the trade with us if you want, or just follow along with us via paper money, and we post every single result, win or lose. So that's what makes us unique, and that's what holds us accountable too. And so we really We really like it, and we enjoy helping people make money. And that's one way. It's one thing to tell people what to do. It's another thing to do it with them, and that's what we do. So in the market, 3 things you need to know: uptrends and how to trade them, downtrends and how to trade them, changes in trends and how to trade them. We talked a lot about downtrend patterns last week because at the time of the webinar recording, that's when we were seeing mostly downtrends. This week we're going to talk about both uptrends and downtrends because we have both those patterns showing themselves to us this week. So with uptrends, really the only pattern you need to know are pullback off highs. The stocks are in clearly defined uptrends above the 50-day moving average, and they're making a low volume, orderly pullback towards areas of support. And VIPS is a great example of that. Here we have a stock in a clearly defined uptrend as shown by the green trend lines above the 50-day moving average for the most part. And all these little pink lines are orderly pullbacks that the stock has made to areas of support. In this case, it never really made it all the way down to the 50-day or the trend channel support because it's such a strong stock, but it made it to all these different lateral support levels from prior highs. Okay, so, and here it is again pulling back towards an area of lateral support, and this time, unlike most of the other times, there's also support at the 50-day moving average and the green trend channel support line. So you've got 3 levels of potential support here, which makes this a really strong pattern. And for us to take a trade on this to the long side, we would need to see a break above the pink line, and that would trigger our trade alert. So there was a trade here, which we actually did. We actually did this one. So here we are setting up again. So this is on the watch list in our newsletter right now currently, and we just again would love to see another week, this next week, just some more consolidation so it can complete this pullback to these multiple areas of support. That would really make this pattern stronger. But with it being such a strong stock, and it has pulled back for the past couple weeks, if it were to go before then, we might just take the trade. So it's definitely what we call in the zone, ready for us to take advantage of it. YY, another Chinese stock, very similar, uptrend above the 50-day moving average, trading in a nice trend channel, and it's pulling back. Again, it has a little bit more work to do to complete this pullback, but it's definitely on our list. Tesla, we've been talking about Tesla pretty much every week, I think, since we've been doing these webinars. And we had a really nice trade where our subscribers locked in a 17% gain in Tesla earlier this month. And guess what? Just because we sold and took profits doesn't mean we just throw it away and don't look at it ever again, because it's setting up again for us. And that's what we like to do. We like to get into these high-profile, market-leading stocks that have great charts and make nice price movements and form these nice, easy, predictable patterns, and we just trade them in and out of them over and over again. We buy them at support, we sell them at resistance, and now we're waiting for Tesla to complete its pullback here. And I don't know if it's going to make it all the way back down to trend channel support again, because there's lateral support here first, and then the 50-day moving average is going to be there. So we're just another week or two of pulling back on Tesla would just be great. It would really make this pattern even stronger. So those are there's other stocks we have on our watch list, but those are probably the 3 best ones on the long side, and with VIPS being the closest to initiating a trade for us. Okay, so now on the short side, downtrending patterns, it's the same thing as pullback off highs. It's just flipped over, and we call it pullback off lows. This is where a stock is in a downtrend, and it has broken through support, and it's pulling back now to an area of resistance, just like the Russell is doing right now. And these mini uptrends create a short sell opportunity. So let's go through just a kind of the perfect example here. Jazz Pharmaceuticals broke support, and then it formed this bearish wedge where it rallied up into areas of resistance at the 50-day moving average as well as lateral resistance, and then it broke through the bottom pink line, and that's where we initiate our short sell trade. It's important that we have both these things before we go out and short. We don't want to try and short a stock that's just initially breaking support, because we don't know if it's going to find support here and just build a base and then move higher. We need to see it break support, then rally back and meet resistance at an area that used to be support. It's now resistance. So we need to see both those things to confirm taking a short sell. So that's the ideal trade, and we have Caterpillar here, which is on the Dow, and it broke through support and has rallied back to resistance. Now it did a nice job clearing resistance at the 50-day as well as this lateral resistance, but then it ran into some trouble here and kind of had a negative reversal on Friday. So we'll see if that ends up following through to the downside next week. But for us to take the trade here, we need to see a decisive break of this pink line to the downside. Notice how the stochastics, which is a secondary indicator we use, they're short-term overbought. We like to see that combination, the short sell pattern being close to triggering a trade with the stochastics overbought. So that's what we're looking at. We've got lots of other short sell setups on our watch list too. So it's kind of a six a half dozen the other. We've got just as many stocks on our short sell watch list as we do our long side watch list, and I don't anticipate us doing a whole lot next week because I just don't think there's going to be a whole lot of volume in the market as we get into the Labor Day weekend. But we do have a lot of patterns that are setting up. Some are getting closer, and we're expecting to do some trades really soon. And the nice thing is we're all cash here, and we're just waiting for things to trigger. We're not going out and trying to predict something's going to happen and jump ahead of this stuff in anticipation. We're going to wait until they actually happen, and then that's when we take the trade. So if it doesn't happen next week, then we just sit in cash and enjoy the time off. And if it happens, we're ready to go. We know what we need to see to take the trade. So that's it. And so we're going to be, so let's see, next Friday will be our last recorded webinar, and then after that, on September 5th, we will do webinars live, and with hopefully all of you bring in your questions and your stocks that you want us to analyze, and questions you have about investing or the market, and we would love to answer them. And I'm looking forward, actually, really looking forward to getting back to that, because I really enjoy the interaction with folks and them bringing in their questions and stocks and analyzing them for them. So in the meantime, we have a 15-day free trial if you'd like to learn more about these patterns I went through, and you'd like to see how we trade these setups that I went through along with all the other stocks that are on our watch list. You get everything our paying subscribers get for free for 15 days. There's no credit card required or anything. Just the form, all you do is fill out your name and your email, the email you want the newsletter sent to you for free for 15 days. That's it. So it's really, really easy. Just go to our website, allabouttrends.net, and you can sign up for that. And by signing up for that, you'll automatically get an invitation to join us live on the live webinar that we're going to be starting again on September 5th. So that's about all I have, Dennis.
Hey, David, thank you. Always, I'm really liking three of the trades you were talking about: the YY trade, the VIPS VIPS trade, and also the CAT. All three of those look really interesting. And and I want to answer a question that some people have occasionally: is why are we watching the same stock? Well, both you and Harlan and myself, you guys from All About Trends and me from Active Trend Trader, we basically only trade IBD quality stocks, and so that's one of the reasons why we're looking partly in the same pond, but we have slightly different triggers that get our subscribers in at slightly different places. And so that's why, isn't it?
Yeah, and the reason we do that is because we want to be focused on IBD is hands down the best entity for analyzing stocks from a fundamental analysis. So the fundamentals, as far as I'm concerned, are taken care of. They're not going to be in the IBD 50 or any of the IBD's lists without having strong fundamentals.
Yeah.
And so all we have to do now is worry about the technicals, and we want to be in those IBD stocks because those are the stocks that are making the biggest moves. Like I said yesterday at the Money Show, Cisco's a great company, but a lousy stock. I mean, it just doesn't move much, and so it's really hard for me to make money on that. But, you know, Jazz Pharmaceuticals, Tesla, Facebook, those are the types of stocks that make strong moves to the upside and can make strong moves to the downside, and the point is they're making moves because as far as we're concerned, a company is only as good as its stock, and that's why we focus on those IBD stocks.
Yeah, right on. And so, hey, I like to take this brief moment to be able to do some teaching, if you will, and to be really quick. You talked about something, and it's very evident here on the Russell. You said that you're looking for a nice, orderly pullback, and I want to say, just really quickly, can you see my chart here? This is a daily chart on the left-hand side of the chart, and this bounce that the Russell did down here, as you'll see, there is absolutely no candlestick reversal signal in any of this way all the way up. But this is a nice little run, especially in TNA. It's almost like a 15+% run if you're trading the 3 times leveraged ETF. But so, and this has been a real challenge to trade because of the wide and loose price movements. But look what happens over here where it did something very similar. Those are what especially this one and this one. That is, what'd you call it, David? A controlled? No. Controlled pullback or a
orderly pullback.
Orderly pullback. I love that terminology because see how, I mean, you can see literally an orderly pullback and a bounce. Orderly pullback and a bounce. Over here, we get, you know, continue to push higher, but not very much order, if that makes sense there. I just wanted to show that to folks real quick.
Yeah, so I would like to see it trade ideally sideways or just with a little bit of a downward bias for the next week,
yeah,
and run right into this well, I can't show you, but run right into this trend line that you have drawn there.
Yeah, right here.
And move higher. That would do a lot for our sentiment on, you know, going out and going heavy on the long side.
Yeah, I mean, I would like to see it either break that trend line, either one, you know, to the downside, or come down and bounce off of it. Right. I mean, things are looking very positive, but again, we're up at resistance on the Russell. I just want to hit real close to everybody. For the members with active trend trading, I'm going to be putting out a update on the Tesla selling weekly premium against Tesla. David, as you can see, Tesla, again, there was order to what you were talking about, and I know that both your subscribers, my subscribers, and members got in down here at the 210 level, sold a little bit, got back in over here about 224. I'm still holding the position I have at 224, and as you can see, from 224 up to its high, it made up to where it closed. This is about 14%. But by utilizing this strategy where I'm selling weekly premium against this, David, my actual return over the last month since earnings report is up to 19%. And I'll be updating all our members on specifically how that was done. So
great. Yeah, that looks like a great stock for doing what you're doing, you know, yeah, selling premium, because, you know, the conditions are ideal for that.
You betcha, and it has a requirement of it does have weekly options, so it's just like what's that? I love that term you guys talk about is resetting the pins, but not resetting the pins. You wash, dry, and
wash, rinse, repeat.
Yeah, and that works well. Hey, I just want to remind everybody the active trend trading system is also for any market condition. We have 5 pillars we trade by, and we show people what to trade, when to enter, when to exit, what strategy to use, and then what to expect. And David was talking, you know, between our services, David, this is the net profit that we've taken off the table since June 1st, $8,700. We are currently, I'm 32% invested in 2 stocks. I have SWKS and Tesla. And again, just the stock by itself, this is where we're at. And so, David, I think if we rolled over the last 4 months that we've been working together and doing this and offering some of these things, we're probably talking close to $15,000 or more.
At least, yeah, we're probably pushing closer to 20.
Yeah, which is absolutely amazing. My objective with the active trend trading system is to return 40% per year. The IRA account hit 39.8% this past week. My margin account, which I used the margin account originally at the beginning of the year as a test account to do different strategies, but it's up almost 24%. The winning percentages here, 66% win, 68% on the, so right now we're ahead of schedule compared to we're ahead of schedule, and so I'm liking it. Premium subscription, just gives you an overview of what is included in that. I won't dwell on this. And then what we have pushing, coming downstream very quickly is some of the active trend trading system refinements for traders with longer-term horizon. As a matter of fact, that's what our Wednesday night midweek market sanity check training is going to be on this week. And then some power alerts, similar to what we showed you with UPRO at the beginning of the show. And then some training courses for beginners and more. So with that, David, do you have anything? I kind of miss having the folks around for the live show.
I do too.
Because,
I do too. I can't wait till next or 2 weeks from now. Yeah.
Because I love when they bring the stocks that they're trading. I love when they do that, so we can kind of go through it really quick. And
right.
So, David, I've kind of added a couple of things to our slides. I think I've brightened them up a little bit. But
I like it.
Cool. And so I want to let everybody know, have a great weekend. And keep growing the egg. That's that thing in the middle, guys. Keep growing the egg. And until next time, for both David and Dennis, trade wisely and profitably. You got anything to add, Dave?
Nope, that's about it. Hope everybody has a great Labor Day weekend.
And so, okay, I'm signing off.